So,
I think we're going to get some clarity from Christopher Inks at Texas West Capital. And Chris, I've set you up. Thank you, Steve.
thank you, Dale.
Yeah, great job by the team and some very wild volatility. So, Christopher, welcome back to F.A.C.E, buddy.
All right. Hey there. Appreciate it.
Hey, what a great day to have you as far as I'm concerned. I'm looking for some clarity. Did you enjoy last night, buddy?
It's the markets, right? So
yeah. All right. Okay.
I'm not sure there's really anything to enjoy from that. Everybody getting all kind of crazy and
a lot of people got chopped up in that.
Yeah. Let me get my screen up here. Sorry about this.
Okay, buddy.
Let me see.
So everyone, Christopher has been here. I think this is like your fourth time with us now, Chris.
Yeah,
and,
something like that. It's been quite a few times this year. And, if I had thought about it when you offered me to come back today and I thought about it being the day after the election, I might have put you off for a week.
Oh, yeah. It's it's good to have you be challenged. So, I mean, we're all challenged by this. Yeah, go ahead.
That clearly looks like the USD CAD that I was showing before. I know it's the DXY, so I'm assuming you're looking for at least one more leg lower in both cases.
Yeah,
right?
yeah. Previously when I was spoken with Dale, we were talking about this low coming up down here, and we had a little bit of a different count, saying potentially a low. But we've got this three-wave advance coming off that, and then we pull back below, which kind of sets it up into this, potentially a triangle. And then we have that, what happened last night, which, as you guys were talking about, we had this ridiculous candle here for today. And so I'm actually kind of looking at this, even though it's still potentially a triangle, I think what we might end up getting is a WXY up here. So potentially, heading up there around 95. And I say that because if we jump on over here to the Euro USD over here, this is broken down. We were kind of watching this as a triangle as well. Obviously it makes up, 50% of that
double zigzag, yeah?
And so we've got that dip down below there. And so, there's no more triangle here, but again, looking at the three-wave decline, three-wave advance,
double zigzag.
Three-wave decline. I'm sorry?
It's a double zigzag, right?
Yeah, exactly. That's what I'm kind of looking at the moment. Obviously there's still, time for anything to kind of happen, but I think this is probably the strongest case at the moment, which means we would have one more up. And then, that should do it. I mean, if my count overall would have this then as a 3 up here, this is a 4 as a correction. And so we've got a 5th wave once this is done heading up. And so that would then, of course, jumping back over here to the dollar, that would take us down just that one more here. Now, I've talked to a few people, and then they tend to still be very bearish as far as the dollar goes. We were almost record bearish dollar levels over here. And since then, it's kind of driven off a bit, but we never had we didn't have any real.
We never really squeezed the bears enough, did we?
Yeah, exactly. So I think we've got a little bit I think there's this whole jockeying over here. Some people are kind of going, oh, well, wait a minute. It may actually be reversing, and others are trying to be staunchly bearish. And so you get this kind of overlapping correction thing going on. I think you need one more drop down to kind of get their attention and then reverse on up. And of course, if that's popping up there, that changes everything in terms of, what you'd be looking at for the, the stock market.
Could we go to 95.50 and then break to new lows?
Yeah, I think that's probably that right there is just that 100% extension off of WXY here. So at that point, Y would be equal to W. My only caveat I have with this is this descending channel here.
Yeah.
And based on that channel there, we've got a channel target up here of around, what is that up there around 98, which kind of gets us to the equilibrium here of this structure. And so I've got that still in the back of my head. It doesn't have to stop right here. At 100%. It could extend further. That's quite a big extension though. So again, as I say, there's a lot of iffiness, going on right now. And then these are just kind of where we're looking at. So, first thing is, do we get the triangle? If we don't get that, we're looking, minimum right here about 95.5. If we continue up beyond there, then I'm kind of looking at this level up here. And then, I'll kind of reevaluate what kind of structure we've got playing out here.
Yeah, that looks like the battleground to me. Looks like 96, 97. And if we fail from there, we could have quite a bear market from there, don't you think?
Yeah. I mean, I think, other than, potentially just this fifth wave, I'm going off, if I zoom out back here a little bit, I'm kind of looking this as as we kind of talked about before, I've got this one, and then this expanded flat is what I'm looking at right here. Now, obviously, this whole area right here leaves it up to interpretation a little bit. There's a couple of different counts you can kind of get out of that. Right now, I think this makes the most sense. I know most people right now are very they're very bearish on the dollar because the government's talking about QE, and all this QE spending going on and whatnot. But if we look at what QE really is, I mean, for the most part, you're talking about asset price inflation, and then you're talking about bank reserves. Basically, the money goes into the Fed Reserve to give the banks a cushion to go out there to encourage them to loan. And the problem is the banks haven't been loaning. They've curbed their loaning during all this time. So even as QE was going out there, less money was actually entering the system. And, so if you're doing that, then it doesn't matter how much money is actually being printed, so to speak, if it's not getting out and circulating. And therein lies the issue. But everybody says, okay, well, QE is going on. Government's printing all this money. So, the value of the dollar has to decline. It's going to bust. Honestly, we've been doing this such a long time. I don't know that we're going to have a dollar bust or anything, something that it just completely dies off. But I think people are getting a little ahead of themselves with that.
Okay, so to clarify, you think there's still potential before we go to C or 2 down there at 90 that we could head up and squeeze the bears over 94. 20, 94.80, that W and A point up there, and then fail after a rally? Or you think a breakdown is imminent right now?
Oh, no. I don't even, I think it's definitely possible that we could have that squeeze up.
Yeah. Okay.
Like I said, I was much more into this triangle idea prior to last night. And then with the euro kind of breaking down with its triangle,
right.
And then of course, you guys were already talking about the USD CAD. I traded that last night as well. And so we've been trading that pretty well off the bottom here. But, when you're looking at all that, the euro making such a big part of that weighted basket against the dollar there, that we generally tend to find, that they kind of
mirror,
move opposite. Yeah, exactly. Mirror of each other. So its breakdown kind of suggests that the dollar is likely to head up there a bit higher anyway. But, again, at the end of the day, we kind of talk about, on the side of caution here because you've only got this 3-wave advance, but realistically 3 waves up could be a leading diagonal. And so this could actually be a 1-2, and then you get 3 up for a 3, back for a 4, and 3 up for a 5. And so you get this ascending wedge kind of thing potentially. And so if we get that, then you're talking about this being the bottom here, back to my original count from last time back in the summer when I talked with you.
Right.
So I don't think there's any real, everybody's very, very positive, more so about what they think is going to happen. And I think that we're we should be much more cautious about what we think is definitely going to happen right now.
Yeah. Well, you like W.D. Gann said it all, didn't he? That if you don't learn how to change your mind, you won't have any change left.
Oh, exactly.
Yeah. So I know you study Gann. So, I mean, I have that written down because I used to be kind of a stubborn trader, and now I have no problem flipping. In fact, you know what, Chris? Sometimes I have to be the wrong way to know to go the right way.
Yeah.
Have you ever experienced that? I mean, you put positions on, and when the market's going in your direction, it's a struggle, and it kind of tells you that, you're not to take another look. because it's
Oh
not
yeah,
performing the way you thought it would. And, sometimes you have to reverse.
Oh, definitely. Yeah. And I think unfortunately, as it's one of the hardest things to do, as a trader, because, we're humans, we've got emotions, and, we want things to go the way we want them because we all want to make money. Right.
Yeah. Well,
So, yeah, it can get kind of
the
crazy.
most important word for a trader for me, Chris, is next.
Next. Yes. Yes.
Don't you
Move on to
think?
that
I
next
mean,
one.
instead of, doing a post-mortem on everything that went wrong and going fetal on your couch. So, or when you're right, doing cartwheels in the room, it's, don't you kind of want to just get to every trade is just another trade?
It's just another trade. That's right. I mean, at the end of the day, we just got to kind of get to ourselves and say, well, you know what? We're going to make mistakes. We're human beings. We are infallible, or we are fallible by design, infinitely fallible. The odds are we're going to be more wrong than we're ever going to be right, not just in the markets, but in life. So,
yeah. Oh, yeah.
If we accept that and we use proper risk management.
Yeah, I could confirm the life part. Let me ask you this. I think the big question, especially after the recovery in stock indexes, Chris, was last week's break more important than this week's recovery?
Okay, let me go ahead and pull up here. So if we're looking at the stocks here, I mean, if we zoom out and take a bigger look at it, this is the NASDAQ here, the index.
Yeah.
And I believe last time I was talking with you, we were talking about how the NDX was leading. We continued pushing up while everybody else was lagging. And I said, well, once we have that breakdown, I think we're likely to see the NDX leading on the decline. And so far, that's what we're getting. So, at this point right now, I'm really pretty bearish right now on the stock market overall. This here is my obviously my larger count here. But if we get a breakdown below this swing low over here that I've got labeled as B, so this is that 10,677.85. I mean, I think that pretty much just seals it. I think that's, it's down and going there. You've got a possible double top up here, a little bit higher than I'd like the difference between them, but possible nonetheless. Based on this count here, we've got this expanded flat kind of going on. That gets us a minimum 5 down here to around 94.34. And, that 5 is just 1 on the way down. And that would kind of align with the idea that, again, the
dollar's going up
for this year, that we're at this kind of credit bubble popping coming off of that. And so,
okay.
I mean, that's kind of what I'm looking at the moment there. And the other charts, the other indexes really are too different. We can jump over here real quick. Let me see here. We got the E-minis up here. Same basic idea. I think more or less this red line here is really kind of the area. As you can see, we have the resistance and support again. So if we're dropping down through that, especially below that wave 1 there, that just opens that move down to at least 27.60.5 at least.
Okay.
Going
interesting
down there.
Look. Yeah. So really the red line is really a red line for the bulls on all the stock index charts that you
I think so, more or less. Yeah, it's that area right there. Whether you look at the NDX or the DJI or the S&P or anything like that. So
okay.
Big picture is we're just kind of moving sideways at the moment, but we remain really vulnerable to that breakdown there. And if we get that, I don't see how it gets positive after that for any length of time. I think that really kind of says we're headed down.
And from you and your work, and some things I notice in the gold silver ratio, you were leaning towards silver showing less relative strength. I mean, gold taking out its 2011 highs, and even though silver was spectacular on that rally, not close to those highs. So, and silver has been underperforming gold the last few weeks. I mean, it's my preferred short if I want to short metals. I'm wondering if you see a continuation of that, or maybe your view has changed between the two.
No, not at all. We talked last time about how silver generally leads gold, and then how it didn't.
Right.
up there in this. And then, so that gives us this likely move down here. Let me see here. Oh, this is not the right chart. Let me see if I can find my, right chart here. Let's go look at that one right there. Yeah, I mean, again, my gold and my silver, I'm still looking at them down overall, headed down. I don't see any reason to be excited about them at the moment. I've got now, with the silver chart here, I've got two counts. I've got the black count and this red count.
Yeah.
Kind of watching how this plays out here. But in either case, it does just kind of set us lower. And again, still looking.
So you think we could have a C rally up to about 27 on your last count?
Let me zoom in.
Last chart you had there, I saw a C up there.
On this one here? Yeah, right here.
Yeah.
Yeah, potentially. If we're watching this red count here, if we've got a 1 done here, basically just a 1, 2, 3, 4, and a 5. At this point up here around 26.5 or so, wave C would be equal to wave A.
I see.
So we would have basically a 1. I don't know. I guess we're looking at this to be a 1, 2 right here. So let's see if we can get a little bit closer, better idea of where we'd be looking at here. Let's see here. Yeah, maybe a little bit higher, potentially up to around 27.34.5 or so.
Okay.
And
your bearish, and your bearish count is we've already peaked and we're heading down now.
Yeah. So if I look at what I'm looking at here, again, as we've been talking about previously, we get this B wave ends up here, and then we look for a C wave coming down here toward about 5.5 or so.
Wow.
From that. So we've got the A low down over here back in December of 15.
Yeah.
Followed by that B up, and then that C down. And for gold, it's not really any different on that. If I jump over here, let's see. Oh, where's my gold chart? There it is. So, I mean, locally on gold here, again, the idea being this is wave B top up here. Let me zoom out real quick, the bigger chart. There we go. So, I mean, bigger chart here says A, B. We get a C down here around, 850, 950 kind of area. That gives us this expanded flat. And then zooming in there to where we're at here locally. Again, looking for the drop down below this swing low. And I think if we get that pretty much, what is this here? This 1848 kind of area.
Oh, yeah. Okay.
Yeah, I think if we're dropping below that, I think that just kind of seals it down.
And the alternate would be some type of fib retracement off of the pullback we've had, a C wave up there.
Say that one more time. I'm sorry.
The alternate would be a C wave back over this 1910-20 level, get up to 7. You have resistance above it. So
like this, like an A, B, C. Is that what you're thinking? Yeah, exactly. Yeah, I mean, this, it looks completely corrective at the moment here.
Right.
We've got the resistance, the support here, which is working as resistance there. So I could see a push up potentially in that a little bit, but not overly excited about it.
Okay.
I mean, right now, if we look at this, we can get like an A and then a B as a triangle and this being a C here. So let's get you 1. And then, like you said, A, B, C gets your B, and then you have a C coming up. So in that case, you'd be looking potentially, a minimum there of about 1942 or so.
Okay.
That gets you wave C would be equal to wave A. Obviously, can go more than that, but that would just be a 1-to-1 ratio there at least. And that gets you, where you kind of would expect to get caught. I mean, if this is going to head down, as bear markets, you drop down, you pull up, you hit resistance, and you continue further down. So
without it being impulsive? I mean,
I'm sorry?
why are you, because I know you're a wave guy. Why are you bearish gold with this all being corrective to the downside and not really being impulsive, except for the first break off the high? You consider?
Well, again, for me, it all goes back to my original count, which has that, this B ending up here and heading down.
Yeah.
Which is why then I said, you want to see this breakdown of this right here.
Okay.
So if we kind of zoom in here a bit, Actually, you know what? I've got a, let me see here. Let me pull up my actual gold chart that I usually use here. Let's see. So again, kind of like what we've got with silver, we've got the same idea of two possible counts here. We've got the red count and the black count.
Right.
And so, looking on that, if we look at that, basically what we have is a triangle there on that larger picture could potentially just be this 1, 2. And then we're working on a 1, 2, and then a 1, 2 here coming down. So basically just a lot of consolidation here. And so if this kind of plays out, we don't actually have a triangle right here, but what we have is a congestion, a backup that should see a strong move down. If that's what it actually is here, this 1, 2 kind of idea. Just this backing keeps trying and then finally gives up, and you should see a strong drop down. If it is this other count.
Okay. You have a view on oil? Recently had a pretty big break to $33 and has recovered about 61.8 here. Do you do much in WTI?
Yeah, man. WTI, let's find it here.
I see it's
there we
on
go.
the bottom. Yeah.
There we go. Okay. Yeah, I mean, big picture on this. I've got a first wave completion up there at that high back there in August.
Right.
This has been a big corrective here. I've got it could potentially be done here. We've got 5 waves down from this B wave swing high here.
Yeah.
It dips below this this channel here.
Right.
But I'm not convinced yet. So I've got this other count here which says, okay, maybe we've got the A and the B, and then we've only got one of C done right here.
I see.
And that's what I'm kind of looking at for here is do we get this break back down? Because if we do, then, we're looking at probably further down here toward the low to mid 20s to finish that off. Okay. My only other side to that is that we had this huge drop down here. And so prior to this huge drop, I was looking at this being a 3, this drop that we had that close down there around negative 37. Being a third wave, this move up would be a fourth wave, and then we'd have a fifth wave. And I'm not convinced that won't happen yet. And that kind of, freaks some people out, because that would mean, hey, we're going to have another 100 that closes negatively. Yeah. But if we look at what's going on around the world, then, if we look at the economy, and if it does this broader decline that I've been talking about for a while, I think that's definitely possible. We've still got a glut of supply, across the world. Part of the issue we had when we had this decline back here was the fact that, if you're trading WTI contracts and you're holding a contract when it closes, you absolutely have to accept delivery of oil, versus Brent crude, where you can, settle in cash. So the problem came that there in May, your big buyers of oil, your airlines, your cruise ships were like, well, usually they buy ahead, but they were like, well, we've got this pandemic going on. Nobody's doing these things, so we don't need it. And so there's this glut of oil sitting there now, and nobody has anywhere to put it, because the storage is basically at that point, I think it was something like 80% of the world's storage was used already. And if you're doing WTI, the oil is actually transferred via pipeline. And so even at Cushing, where we have the major hub there was supposedly no room to store oil. So you've got the supply of oil, nobody needs oil, and you've got people trying to get rid of these contracts. And so that's why you get that dip down there. Well, I mean, nothing's really changed since then. And now you've got the Saudis who can, they can produce really cheap oil. And, they appear to be setting up to really take advantage of the situation here to kind of leverage that and really kind of gain, that oil market share. Because here in the U.S., the only reason we did so well for so long was because we had cheap money. We became this top producer of oil because of fracking and this pulling it out that way. But that's a very expensive way of getting oil out of the ground. But again, with all the loose money for the last, 5 to 10 years.
All right. I was just playing pipeline.
Oh, Yeah. So, we had all that. So now we don't have that anymore.
Yeah.
And I know, Trump said this thing recently here where he said, we're going to save the oil industry and all this basically. But, what do you do if there's no demand? And the way we were doing so well was because of extremely loose money that makes the very expensive way of pulling oil out of the ground, able to do. I mean,
right.
And you have nowhere to store it. I mean, what is it really that he can do? And so, I see the possibility there, especially if this economic conditions continue to deteriorate.
With COVID, another wave in COVID globally and stuff. Yeah.
Yeah. And the thing is, we don't even have to, I know there's a lot of people out there, that say, oh, it's not a thing. And other people, oh yeah, it's definitely a thing. And at the end of the day, it really doesn't matter. It's what is government's response to it? That's what matters. And, a government's response, as we've seen prior, is going to be pretty extreme when it does it. So if government believes there's this, COVID's continuing to advance and whatever, the government's going to do what's going to do, which is going to end up hurting, business, which is, I just don't see how oil ends up going up in that respect.
Yeah, it would take some type of geopolitical event in the Straits of Hormuz or something. So, Chris, I love your work. Okay, buddy, I respect it. And so if I do, I wouldn't be surprised if there's a few other people that do as well. What's the best way, and probably more, the best way for people to follow you besides Twitter at Texas West Capital? You want to show your website and what you offer?
Yeah. We can just jump.
This is your commercial, bro.
Is my commercial?
Yeah.
All right. Well, we can jump on over there to howtotradetowin.com. Let me see if I can pull this up here. I think you got it sitting up here. Pulling up there. Man, I tell you what, sometimes it doesn't pay
to get up.
Yeah, I tell you what, man, sometimes I just have trouble. I don't know why I have trouble with electronics sometimes. I love it, but man.
Yeah. All right.
Yeah, you can jump on over to howtotradetowin.com.
All right. And that's the website, www.tradetowin.com.
Howtotradetowin.com. Exactly. And you kind of see everything we do there. A lot of education. At the end of the day, I think what a lot of people find online is they're looking for somebody to tell them where to buy and sell. But, as we're all different, and the things that make us who we are as traders or investors is different between each of us. So, even when somebody says this is a good place to buy, depending on who you are, it may not be the best place for you to buy. So everything we do starts with education first. It's explaining how and why the market moves the way it does, how to use indicators and things properly, different ways of looking at the market so that you can, risk management, big thing on risk management. So that way you can kind of figure out who you are. And then find out how to best trade for yourself. Yeah.
People don't learn if you click the mouse for them.
That's right. And what happens if you're not there one day?
Yeah. What if you're retired on a tropical island and they go, well, I don't know what to do because Chris isn't around. So exactly. Chris, I want to thank you for being here the day after a wild night. I'm sure, if you're like me, you were, involved last night, and I really appreciate your work and you coming here to edify our community. Thank you, my trading warrior brother.
I appreciate it, man. Thank you so much.
All right, everyone. That's Christopher Inks, and you can follow him at Texas West Capital, and you could find him at www.tradetowin.com. That's a wrap. Today's Wednesday, I believe, and we'll see everyone tomorrow. Tomorrow, Peter Goldstein will be with us. Thanks again so much, Chris.
All right, take care, Dale.
All right, bro. And that's a wrap. Remember, don't just count your pips, count your blessings. You're welcome, Didier. Trepal, you're very welcome. And we'll see everyone tomorrow. Adios. You're welcome, Money.